Time for the market report, a focus on livestock this week.
We have an extended look into how things look both statewide and nationally due to all the current news. But first, the numbers. What were the week's biggest gains and losses? And then a cattle update. Dr. Josh Maples tells us how things look from a market standpoint so far this year and how it compares to previous ones. So markets closed again on the downswing with row crops the most heavily affected. Some serious price drops here. Let's take a look. The week's biggest gain, lumber up over 20.5 bucks, a 3.5% increase from the previous week. The week's biggest loss, corn, down 29.25 cents. That's more than a 6.5% decrease from the previous week. It should be noted that both soybeans and wheat also fell by 5% or more, so a significant price drop. And now we look closer at cattle, our nation's supply and health, a good bit in the news lately. I spoke with Extension livestock economist Dr. Josh Maples to get his take on the situation. But first, we review the latest cattle on feed report to give us the proper context. Cattle and calves on feed for the slaughter markets totaled over 11.5 million head, 2% higher than last year at this time. Placements in feedlots totaled over 1.5 million head, 6% higher than last year. Marketings of fed cattle during April also totaled over 1.5 million head, 10% down from last year. Other disappearance totaled 52,000 head, 4% up from last year.
Yeah, so cattle prices so far in 2026 have been stronger. I mean, we've seen some volatility quite a bit in futures markets in particular. But if you look at year over year cattle prices, we're above where we were last year, which really is to be expected given the tighter supplies that we've had. So I would call it stronger, but with some significant volatility, especially in cattle futures markets. Yeah, so the beef on dairy trend, not as much in Mississippi just because we don't have as many dairy cattle as you see in other places, but it's absolutely something that's taken off nationwide, and we're seeing the impacts there in terms of especially the value of those calves, those crossbred calves is sharply higher than what a traditional Holstein calf was worth. I do think we're going to see some correction at some point. I mean, I think the genetics and just the technology, the feeding management, the feeding technology is allowing those calves to be worth more. So I don't think that's going away. I think we're going to continue to try to use those calves for beef. And quite frankly, we have always used those calves for beef. I mean, they've always, I think part of this, there's this thought that, hey, these are new animals. They're really not. You know, our dairy cow herd has remained remarkably consistent for years. And so those calves have always been being born. They've always turned into beef at some point. The key difference is now is they're more productive because of this genetic technology and management. So I think that's going to continue to be something that the industry deals with. I mean, I'm looking forward to the mid-year cattle report. So USDA puts out a July cattle inventory report. That report is not as comprehensive as the January 1 that we get every year, but it does include heifers held back for beef replacements, and it also gives us an estimate of calf crop for the year. So two really important pieces of data. But, you know, just looking at how the year has gone so far, you know, we've still got quite a few headwinds to expansion, and definitely no clear signs that we're just retaining a bunch of heifers just yet. So I would say maybe we're kind of in that stabilization mode still, but no obvious signs that we're really expanding yet. Yeah, so the beef side is what's in the news all the time, right? We got really strong beef prices, but, you know, we've had really strong beef prices for years now. And for, you know, certainly going back to 2022, 2023, we've been talking about this. And it really just goes back to the cycle, the point in the cycle that we're in. We're at the tightest supplies that we've been in a long time. And it takes years from the point that we start expanding the cow herd to the point where we actually see more beef on shelves. And so, you know, we haven't even got to the point yet where we see increased heifer retention in a meaningful way, which would be the kind of the precursor to more calves on the ground, which will then eventually be more beef in grocery stores. So beef prices are high because we've got really tight supplies of beef, we've got really tight supplies of cattle, and we haven't really yet seen that start to turn yet. So that's the main thing underpinning this. And then if you get into the kind of the things that affect that expansion, I think that's what's really key as we look forward. There's plenty of things that are making it more expensive and the things I'll just call headwinds to producers trying to expand, drought being a big one. Yeah, I would say on the cattle markets in particular, we should expect this volatility to remain for a while. We've just got we've got a lot of things bouncing around right now. One, we're in this point where we're trying to figure out, are we expanding or are we not? So there's already kind of that piece that markets are trying to sort through. And then you layer in things like higher production costs, you layer in things like screwworm. There's a lot of uncertainty in these markets. And so that's what leads us to these really big up and down days that we see in futures markets. Now, on the cash market side, you go down to the auction barn to sell your cattle. We haven't seen as much volatility there on actually selling week to week. But day to day, as markets try to absorb this information, lots of volatility. And I think that's going to be around for a while, just given all the things that are feeding into these markets right now.
And that's it for a deeper look into the markets.